Okay, Matthew asks, when is a pivot point made in the month? Certain day. Okay, a pivot point appears on the first of the month. A monthly pivot point for the month of July appears on July 1st. It's always on the first of the month. Why? Because it uses last month's price, and also just because it's a monthly pivot point. So it can only last until the last day of last month, and it has to start on the first day of the next month. Okie doke. Stafford says, are hit pivot points still an attractant for price? No, they are not. Once a pivot point has been hit, it is no longer relevant. Why is that? Well, I mean, that's a good question. Let's take a look at AVRO. AVRO had, in the past, a missed pivot point here at $1.11. But it got hit the very next month. So it was a missed pivot point in April. It got hit in May. It didn't matter today. It's irrelevant. It's not a relevant level anymore. It also, once upon a time, had a missed pivot point in April of 2022. But it got hit by price when it rose on February 8th of this year, 2023. This morning, it has gone to that level and kind of stopped. Does that mean that everything I just said was a lie? No. It means that price is free to just break out and run past that level. It's no longer necessarily going to cap or stop price. It can, but it's no longer the same. It's no longer as valid. It's no longer as powerful, and it's no longer as useful to me. Kathleen asks, when you add monthly pivots to your charts, does it add the pivot for every month, some months, just the current month? If you double click on the settings, originally when you set up the pivots, you can choose how many pivots back you want it to show. Make sure you're choosing monthly, and then you can set how many months you want to show on the chart. Make sure you're also looking at this on the 4-hour chart. And remember also, these aren't lessons about daily pivots. These are not lessons about weekly pivots or anything. This is just about monthly pivots here. Marge says, how are missed pivots affected by stock splits? Well, they're not. If a stock splits, everything gets reset. So in a reverse split, AVRO might suddenly one day, you might wake up and AVRO is $14 a share instead of $1.40 a share. All of the pivots will be reset historically also, and all the same pivots that were hit will be hit, and all the same pivots that were missed will still be missed. Okay, Larry says, what about all the ones that shot through a pivot point? Wow. Let's look at HCTI, for example. HCTI this morning shot through and jumped above the pivot point level that had been missed. That's fine. It doesn't have to contain price exactly. It doesn't necessarily stop price on a dime. It's just a place where price can go, and it can still move above it. It's just going to be a barrier, and it's going to be a little bit more difficult. Okay, I'm going to pause the recording here. Next question from James. If price breaks through, does it mean the stock is strong or weak? It doesn't mean either. It doesn't necessarily mean either. It means that it broke through. So I hate to not give you the answer that you were looking for. In other words, James, by the time the pivot was hit, it did everything that it needed to do. So it's like it accomplished its mission. So let's say you're playing Grand Theft Auto, James, and you accomplish a mission for a mob boss or whatever. I don't know how the game works. And you complete the mission and you deliver the drugs or whatever. When you're done with that mission, you're done. You're not strong or weak. Maybe your strong ratio goes up or whatever. Maybe your level, maybe your appreciation for HCTI goes up. But once that level is hit, it can continue upward or it can fall from there. It doesn't have to do either one of those two things. We just used it as a level that was attracting price, and it got there, so it did what it needed to do. Maybe it'll go a little bit further, maybe it'll drop from there, but remember, it doesn't mean that every single time. So I've said everything that can be sort of definite. Once it hits the pivot, it can do anything. It can drop, it can continue, it can a lot of times, for example, with Apple, on a really strong stock like Apple, a big company that makes a lot of money, it will fall to the monthly pivot, and you might say, well, it fell through it. Does that make Apple weak? No, absolutely not. So that's why I answered the question the way that I did. It doesn't mean that Apple is weak. It just means that the pivot was hit, and it's a fluid level. It's going to bounce around and maybe move around a little bit. But Apple as a company is still strong, and it's in an upward trend. So the monthly pivot may be a place where you want to put a buy order. You may want to buy it there. So you don't want to assume that a stock that falls to its pivot is weak, or a stock that rises to its pivot is strong. James, so he follows up. Thank you, James. So a pivot is really only a profit target. It is also potentially, on Apple, for example, it's also potentially an entry place. So, for example, if Apple falls to the monthly pivot, it's a potential in an upward trend. It's a potential place to enter the trade. On a short selling opportunity, if you're a short seller and price rises to an old monthly pivot, it might be a place where you start to consider entering a trade. So it's not only a profit target. All right, so welcome back. James followed up with a question. Okay, Rob, walk me through the pivot entry and the pre-market high as an entry. So those are two different methodologies, two completely different perspectives, absolutely different perspectives, and they're not the same. I'm going to walk through both of them and show you how they're similar and how they're different. A pre-market high is the highest high that a price went in the early morning pre-market session. So take FRLN as an example. It went to $4.60 in the pre-market session, and then when the market opened, it broke through that level, and it was a buy trade because it was exceeding price. It was breaking through price. A pre-market high is not a pivot. A pre-market high is the highest high that a price went in the pre-market session. A pre-market high is not a monthly pivot point. It's a 5-minute chart, so the monthly pivot point is not relevant here for entries. The pre-market high on a 5-minute chart is the only methodology that I ever use personally in my own account for buying stocks under any circumstances at all, ever. Long-term, short-term, anything. It's the only way that I buy stocks. Separately, let's look at Apple on a long-term chart. Separately, sometimes a really, really strong company, like a very high-quality company, like Apple, will drop for whatever reason. Bad news, good news, earnings, not earnings, whatever. And it will drop. And if it does so, it may be on the way to a monthly pivot point. And this is a long term. It may take days or even, in this example, weeks for that to happen. If you're a long-term investor and you're a long-term holder of a stock, you might wait for it to hit the monthly pivot point as a place where you want to add a little bit more to your position or increase the size of your position or whatnot. Two separately, completely separate points of view, two completely separate time frames, two completely separate ideas, totally different kinds of stocks. Apple's a big mega cap stock. It's a giga cap stock. And FRLN is a small cap, micro cap stock. So they're not similar. And the time frame on the Apple trade would be days, weeks, months, or even years of holding, whereas FRLN over here is like a 15 to 20 to 30 minute, maybe a couple of hours at most kind of hold period. And I'm going to repeat it again. Although this methodology, in quotation marks, for Apple could be used as an entry point for it, I don't buy stocks this way. I don't do any of this. I invented this idea, but I don't use it personally. And that's because there's no reason for me to do it would just take forever for these trades to materialize. You get 2 trades a year. It just doesn't interest me. It just takes too long to sit around and wait for those to happen. Just as a follow-up on that, you can also take a terrible stock, a stock that's been dropping, like Lordstown Motors, which is now, I don't even think it exists anymore, right? You can take Lordstown Motors, and you can do the opposite. In a downward trend, if you see Lordstown Motors jump up to a monthly pivot point, you could short it at that level. If it's a terrible, terrible company, you could, every single time it touches the underside of that monthly pivot, you could theoretically short the stock there. Once again, I don't do that. That's not my thing. I invented it, kind of, but I don't do it. And why don't I if it's so effective? Well, it's not as effective. It's not as effective as the other methodology. So that's why. All right, so James asks, is there a scan for missed pivots? The answer is an old buddy of mine, Andrea Palladino, he did build, I believe he did build a scan for missed pivots in Thinkorswim, but I don't know for sure. Once again, Stafford, scanning for missed pivots would miss the point. You would miss the point. You're putting the cart before the horse, literally, in the world of trading. You don't trade FRLN because there's a missed pivot. You trade FRLN because it has a breakout, and then you might use a missed pivot after. So if you scan for missed pivots, you wouldn't find FRLN. You would find 1,000 different companies. So it wouldn't be helpful. It wouldn't. FRLN doesn't depend on a missed pivot for a trade. It's not relevant. Meaning it doesn't make or break this as a trade. It doesn't say, oh, well, I'm going to get in or not going to get in. So yeah, I used to have them, and I used to even use them. And I'll just maybe follow it up with one more brief comment about that. I spent a long time trying to use a missed pivot as an entry technique, sort of like Apple. Like I used to say, well, if Apple misses 4 of them in a row, then I'm going to short it or whatever. And gosh, man, Stafford, it would miss 3, then hit it. It would miss 4, and then it would miss 5. And I just was like, this is dumb. And what I realized was just trade the breakouts. So, yeah, there we go. All right, everybody. Enough of all the questions. Thank you for your questions, James and everybody else. I really appreciate it. Oh, we got one more, Matthew. All right, Matthew. Is a bounce off of a pivot stronger or weaker than using a bounce off of support? So, yeah, once again, I'm almost sorry I brought it up. And Matthew, I don't want to confuse you, and that's the reason. So Matthew says, is a bounce off of a pivot stronger or weaker than using bounce off of support or resistance? I totally get your question. Absolutely 100% understand your question. It's the same. It's essentially the same. And so, for example, on Apple might have some support and resistance right in this area, right here. Because price kind of jumped around, bounced around, hit those levels repeatedly. So if Apple drops, it's probably going to pause there also. It's probably also going to stop there. The pivot is pretty much equal in value as far as its ability to stop or pause price. The pivot is more effective, Matthew, as a magnet. So when you ask the question, is the bounce more powerful? No. But is the pivot magnet more powerful? Yes. Meaning it's going to be a real magnet for price. It's going to be, let's say that there's a pivot right above this level of support and resistance. Let's say there's another one. There isn't, but let's say there's another one right here. It could very easily hit this, but not this one. The pivot isn't a stronger bounce when it happens, but it's a stronger magnet. And if price hits the pivot, it doesn't necessarily need to move on and hit another level of support or resistance. Okay, now it's really time to stop. You guys are the best.